What is up everyone, it's David here. There are two main things I want to cover in this video, and the first thing is the F45 IPO, where Mark Wahlberg owns a minority stake in the company. We're going to dive into the company financials and I'm going to share my thoughts, whether if it's worthwhile putting that company onto my watch list. And then I want to talk about Apple and Goldman Sachs crashing the buy now pay later stock party, how their buy now pay later features will work, and implications of how that might impact the buy now pay later industry. Of course, I'll wrap up the video with a portfolio update as well. As usual, if you do learn something new, it would mean the world to me if you could gently smash a like button somewhere around here, and no, this video is not financial advice or recommendation to do anything. So without further ado, let's go. For my own portfolio, what I like to do is to figure out whether there is an opportunity with this company to justify spending more time doing qualitative research. And because F45 is considered as a growth stock, the traditional methods of doing a discounted cash flow model probably wouldn't work. So I'm going to rely on multiples to gauge relative value. Don't worry, I have a full video planned on how to tell whether a company is overvalued or undervalued in the future. Just make sure you're subscribed to my channel so that I can let you know when that video is live. So to gauge relative valuation, we are going to need three things. First, we need EV revenue, EV gross profit, and the revenue growth rate for 2 to 3 years, depending on what we can get our hands on. The easiest way to find all of those numbers is via ticker. I'm not sponsored, but it's just a great tool that I use myself. So the ticker code for F45 is FXLV. And we go to that company page, go to overview, and you should find the total enterprise value over here of 1095. And then the next thing we need is go to income statement, go to last 12 months, and you can see that the last 12 months for 31st of March for F45, they've generated approximately $75 million, right? So if we pull up our calculator and do 1095, which is the enterprise value, divided by 75.66, that will give us a 14.5 times revenue multiple. And that's what I have here already. And you want to do the same thing for the gross profit as well. So instead of dividing it by the revenue, just divide it by the gross profit and you should get a 21 times multiple. The next thing we need is the revenue growth rate. And the easiest way to do this is actually go back to estimates and see what we can find over here. But because there's nothing and this company is so new, we're going to have to make some assumptions ourselves. The easiest way to make reasonable assumptions is base our assumptions on company guidance. The good thing for us is that F45 tried to go public mid last year and it didn't work out. But in the company presentation, they mentioned that in 2020, they would do 60 million and in 2021, they would do 182. The reality of the situation is that in 2020, they did 82 million. And I don't think they can do 180 million in 2021 because when we go back to the financials, go to quarterly, go to income statement, you can see that in the first quarter this year, they did $18 million. So to expect them to reach 180 million this year, it's a little optimistic given that we're also facing a Delta variant, right? So I think that it's more realistic to expect 100 to around 120. And then in 2022, the reopening should be much smoother and I would expect a higher growth rate given that I expect that F45 will do $120 million of revenue in 2021 and 192 in 2022, which are really rough guesses. The compounded annual growth rate for the 2020 to 2022 is around 53% per year. And I like to go the extra mile to actually adjust 14, which is the EV revenue multiple, by the revenue growth rate to see for every percentage of revenue growth, how much of these multiples are we paying? Now, on its own, these numbers can't really tell us anything. There's nothing to compare to, so we can't actually tell whether F45 is cheap or expensive. That's why we want companies in similar industries to compare to so that we can get a better idea. And you do the exact same process to both Peloton and Planet Fitness, which I think are relatively close comparisons with the exception of Peloton. I think Peloton is quite different in business model, but Planet Fitness very close to the F45 business model. Regardless, you can see that when the table is fully fleshed out, we can actually make some reasonable observations, right? So you can see that F45 is growing the revenue at 53% per year for the next 2 years, and we're paying 14 times revenue, right? But Peloton is going to grow at 71% over the next 2 years, but we're paying 9 times. Now, the reason why I think Peloton is trading at such a low EV revenue is because of the incident with the treadmill recently. But fundamentally, I don't think the business have changed, right? This is a hurdle they have to cross, and I think it's really interesting. When we look at Planet Fitness, they're anticipated to grow at 36% over the next 2 years, and per year, that is. And investors are paying a 22 times EV revenue. So that's pretty expensive in my opinion. And when we look at the multiples adjusted by the growth rate, it's telling us a similar story. Remember, the lower the decimals, the better. From my perspective, I don't think that F45 is growing fast enough to add that onto my watch list. And because of that, I don't think it justifies spending more time looking at the balance sheet or even doing qualitative research. But as a matter of fact, I would actually add Peloton onto my watch list just because it's growing so quickly at the current multiple. So I'm gonna dig into Peloton a little bit more. Now, in saying that, I do wanna make a note here that I was an F45 customer just because I wanted to change my routine up a little bit from just lifting every single week to add some dynamic full body exercises throughout the week as well. But it wasn't enough to keep me as a customer because as I changed gyms, I realized I had access to class structures that's exactly like F45, and there are no mirrors. People don't really judge me, or I don't think people actually judge each other at all. And it didn't make sense for me to pay for a gym membership and F45 at the same time. So I just think that the defensibility of the business model, we need to see how that pans out. So because of all of the above reasons, F45 is not going onto my watch list. If you want to learn my full process on how I do qualitative research as well, check out my video on how to research stocks before investing, because I documented my entire process there, and I have some extra templates and checklists for you to use as well.
The way it'll work is you'll go to a store or make an online purchase, and let's say it's $100. And if you're part of this Apple Pay Later program, you'll have two options. One option will be called Apple Pay in 4. So what that'll allow you to do is split that $100 up into 4 no interest installments of $25, right? So you'll have to pay $25 4 times every 2 weeks. So it's an 8-week interest-free program. The other program is called Apple Pay Monthly Installments. This is a longer term program. If you make a sizable purchase, thousands of dollars that you want to pay for through Apple Pay over several months. In that case, Apple will charge interest in APR, and Goldman will be the one handling that and the lender for those scenarios as well.
So based on what the journalists have said, it seems like to me that Apple's Buy Now Pay Later service is almost identical to Zip, Afterpay, and Affirm, with the exception that bigger items might have an interest rate attached to it. It also seems like if you watch the rest of that video that you don't need to sign up to anything to use Apple's Buy Now Pay Later service in the future. And we don't know what the sign-up process would be like for bigger items. So still a lot of unknowns, but before I share my own thoughts, I want to react to Max Levchin, the co-founder CEO of Affirm, what he has to say about Apple entering into the Buy Now Pay Later space.
We're not a wallet, which is what I think a lot of the competition or would-be competition is. We're in the business of turning browsers into buyers, which is fundamentally a merchant service. If you look at the merchants that we have from Target to Walmart, from Neiman Marcus to Williams Sonoma, so the network is vast at this point. We are in the business of bringing them new customers, increasing the cart size, increasing conversion at the point of sale, basically enabling our merchants to grow without discount. And that is a very complex set of technology and partnerships that are very deep and exist from the front page to the product details page to the checkout. So that is a significant amount of stuff that we have built and have specialized in and have become a leader in. So I think we're in a somewhat different business than just about anybody else. And we've been very, very strong and have built quite a moat in the last 10 years.
I think it's a really interesting thought exercise to ask yourself, when was the last time that you bought something online and you use Apple Pay to check out? Well, to be honest with you, even though it's anecdotal based on my own experience, I rarely use Apple Pay for my online checkouts. I use either PayPal or put in my card details. And for me, I think that it's really important to separate the utility of Apple Pay, basically more like a wallet structure, versus Affirm, Afterpay, and Zip, which is more like a service that helps businesses turn browsers into customers without offering discounts. On top of that, Affirm have exclusive partnerships with Shopify. And imagine Apple going to Shopify to convince them to change partners. Unless they have a technological advantage or a cost advantage, it's going to be very hard to convince them to swap partners. Not to mention, I think that everything comes down to execution. Whether Apple and Goldman or PayPal can out-execute some of the top buy now, pay later companies, we still have to wait and see. Right now, it's a lot of announcements, a lot of guesses, so let's see how the story pans out. Overall, my perspective is not to worry about the buy now, pay later companies, but more, how will the domestic banks stay relevant over time? Because it seems like to me that tech giants across the world is jumping into financial services to eat their lunch. For my own portfolio, I haven't been able to convince myself to pull the trigger on buy now, pay later. And one of the main reasons is that their competitive advantage is not as clear to me as my position in Twilio, Shopify, or Tesla. So I think this is a really good time for me to do a quick portfolio update. For my CMC market portfolio side of things, it's currently worth around 100,000 Australian dollars, give or take. And the only change I did make over the week is that as Micron actually reached towards 75, 76 US dollars, I added more because I felt like the expected return for me personally, based on my own research, my own calculation, and my own risk tolerance, it was getting better. So I added another 1,000 into Micron, and that would make it approximately 5% of my portfolio. So I feel comfortable with the sizing at the moment, but everything else, I didn't make any other changes. I will be depositing a lot more cash into the account. So over the next couple portfolio updates, I'll talk about my cash position, how I plan to allocate capital moving forward as well. For my stake account, which is basically all US companies, it's currently worth 43,000 US dollars, which is give or take approximately 54,000 Australian dollars. And I made no changes on this side whatsoever. I'm really comfortable with what I have. And I made the changes I want to early in the year. So for the rest of my portfolio, they're all high conviction, so it's likely that that's not going to change anytime soon. And based on my own circumstances, I prefer to just consistently invest. So over the next couple of episodes, I will talk more about how I decide to allocate capital. And as usual, I'm not sponsored by Stake, but if you do want to try Stake for yourself, I have left a link in the description box below. Thank you so much for hanging out with me all the way to the end. If you did learn something new, consider gently smacking the like button right there. Subscribe to my channel, click onto the bell so that when I release future videos, I can let you know. If you're still bored, I left a video on the screen that I think it's incredible to watch next. And as usual, Otto will always do the honors, and I'm gonna see you very, very soon.